TWR Monday Madness.
What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Guys, this is your Monday Madness, and I got a great video for you. But what I need you to do right now is hit that like, share, and subscribe button, and I need you to come along with me on a journey. Guys, check the description out. I got tons of tools and tidbits right there. All the links to Traders War Room, products and services, and everything we offer. Shortly, right after this, I got a little promo of the next upcoming class that we're going to do on Forex. Hope you pay attention to. Hope to see you in class. And as always, if you're ready, follow me, and let's go to war together, team. Traders War Room, baby, let's get it.
Plan your battles with Traders War Room classes. Join TWR on 5 March at 1 p.m. Central Standard Time and learn how to trade Forex, a secret gold mine that never sleeps. With guest instructor, Jay Trades. Just like the Wild West, the Forex market is an untapped resource that can make you a fortune. Just a lot of people don't know how to trade it or are unfamiliar with the Forex market. But don't worry, we got you covered. Our instructor is a Forex guru with years of trading experience. After this class, you'll be amazed at how current strategies that you're already using translate directly to the Forex market, so you can win consistently using skills you already know. Register today at traderswarroom.com/upcoming classes and unlock your gold mine. Every purchase gets a recording. I'll see you there. Stay tuned at the end for new upcoming events. How's TWR doing thus far? So let's talk about Best Buy. We went ahead and entered this trade, $80 put, went in at 2, trimmed out at $235. That's $35 per contract. And for those of you that are new to my way of alerting, up here you can get what type of trade it is, whether it's a scale, whether it's open, whether it's closed, and it'll tell by the color size. Green, open, orange, scale or trimming, red is closed. And then every alert that we put out has a time and date stamp, because you know we keep things 100 around here. Went ahead and peeled out of some Riven. We took the $20 call, went in at 103, peeled out at 122. That's $19 per contract. And finally, we trimmed out a little bit on our YouTube trade. The YouTube trade was Oxy, and here's the trade we did. If you watched yesterday's video, you knew that we got into that $65 call. We were looking out on March 17th, and we wanted to get in around the $50 to $60 area. We got a much better entry than we anticipated. In at 45, we went ahead and took some profits at 51. This was an earnings swing, and we'll see what happens when that bell rings tomorrow, but $6 per contract. And unfortunately, we took a loss today. Our square trade ended up hitting the stop loss. We entered this at 142, and our stop loss was 50, and it peeled right down to that level. And that loss definitely stung a little bit. That ended up pushing us with a $92 loss per contract, and we're looking to make that up tomorrow with some of the trades we got in today. Now, before you guys go and get all like, Chuck Fu sucks and this and that, just look at last week's stats. 20 out of 23 trades, 87%, and plus $2,000. Assuming at least one trade per alert near the entry and exit. Losses happen, guys. It's how we bounce back. That truly matters, and we'll get it, man. We got some fantastic trades to close out, hopefully tomorrow. What's hot and what's not? Here are how the markets ended, barely eking out green, as it was a difficult market and really pushed towards the end of the bell, but didn't have very strong signals of that bullish push. I'm expecting a dump tomorrow. Futures, mainly green, but you know as well as I do, futures really don't matter until what they look like in pre-market. So we'll see what we got in the morning and then see what kind of momentum and market temp we have at the bell. Here's your heat map. Mainly more sectors pushing to the green than to the red. However, it was not strong by any means. Consumer discretionary and materials were the largest, with utilities and health the biggest laggers. Looking at the flow, we're looking pretty bearish compared to bullish, with the exception of Tesla, and that's mainly because of Tesla's
Investor Day coming up here in March, but look for some more downward pressure, specifically in those tech and the ETFs that cover the big caps in the SPY. Dark pool, no surprise here. We got the SPY, the Q, the Microsoft, pretty much the big boys in this house. One of the ones that we're paying attention to in the dark pool is Amazon, and then you got some Apple, and a lot of ETFs are coming into this one, so definitely paying attention to it. Here's your unusual options, and what we like about the unusual options is it gives us an idea into what big money is thinking of, and specifically looking for trends in directions. So definitely not all of these are going to work. Some of them are going for calls and the stock's going to dump. Some of them are going for puts, the stock's going to jump. But normally when big money is investing something significantly, there's usually a sentiment or a tell that's kind of giving a direction or a trend on that particular decision to go that direction. Here's your top gainers, top losers, and your most active. Here's some stocks with unusual volume, like the unusual options. This can sometimes give you a tell if a stock normally has 1 million in volume and all of a sudden they're peaking up to 10 million in volume. There might be something going on. Maybe there's a catalyst, maybe a short squeeze is going on, so on and so forth. So definitely taking note, and we can make some decent catalyst type of binary movements and some paydays off of these type of information. Here's some stocks that are overbought. Potentially these could bounce off of resistance and we could see some downward pressure. And some that are oversold, and just like the overbought, these could bounce off of support and could jump. That's why we like these type of plays, playing off of the reversal. Here's some upcoming IPOs, and fun fact, the IPOs thus far this year have kept their gains more than they've lost. So that's intriguing for the IPOs, and definitely is interesting because a lot of these IPOs coming out here recently are in the healthcare industry or the biotech industry, and they're pretty cheap, $4 to $10 range, and they've ran, sometimes the 2x, 3x. So definitely to keep the eye on it, and can make some good money off of playing IPOs. In top news, it's all talking about debt buying. Buying stocks is just not worth the risk today. Analysts say they have better way for you to get returns as high as 5%, and it's talking about the bond market, guys. And we looked at that last week. And then forget about quitting, and workers are now embracing the bare minimum Monday. So it's no longer the case of the Mondays. It is the bare minimum Mondays as corporate America goes back to work by mandate. Stocks I like for trades. Notable earnings coming up. Anything in a green box has my curiosity. If it's made a move already, it has my attention. Here's your top trending stocks, and these are the ones that are making the moves and the shakes that are drawing attention. All right, so let's talk about SPY. SPY hit some booms today, but it couldn't hold those higher levels. Came back down, spiked back up, came back down. It was struggling to maintain them higher levels. So I anticipate some downward trending pressure on SPY. I would not be surprised if this thing breaks 397, 396 tomorrow, and then has a cascading effect all the way down below 395. That would be my idea if we keep the bear sentiment going. However, the market could turn on a dime. The Fed could come out with some bullish statement. I don't know. But looking at the pressure that I saw from buyer's exhaustion, I'm expecting the downtrending to come into the SPY with some downward pressure around the 395 area before we pick up some support. Let's talk about AMC. So we have a huge mother bar that has extreme up and down price, and then an inside bar as well. So our top and our bottom line are highlighted in the orange, but we got some intra levels in the purple. And basically we're looking for some of those triggers off the purple to give us follow through towards the orange. So we'll watch that, see how it plays off. But definitely, if you're in that $5 call, start looking for your exit, at least trimming back some of them, because I know some of you went deep like I did and got like 50 contracts. So just make sure you're taking profits while you're up significantly. Oxy, our trade kind of was struggling a little bit today. Didn't do so well on earnings like I thought it was going to, but we're still in range. Notice it dumped down to the bottom portion of our box that we had already outlined yesterday, and it rejected that. So I like to see this reject again, and I'd actually like to see it start running towards the top line and potentially break out. I think this one is one of those that has the potential to, even though the earnings weren't that good, at this price, it's something people will start to buy into, and they'll pick up volume for the long haul being at an affordable price. So I do like this for a push to the upside from current levels. Norwegian Cruise Line, I like this for a bullish move to the upside. I think at the current level where we're at, we got some decent triggers. Anything over that $16.95, that $17 range, we could look for the push to the upside. And if we start to trip below that $16.50, we'll look for some downward pressure. But if I was a betting man, I would bet that we get some decent numbers, or at least some forward guidance as far as this cruise line is concerned, and we get some bullish push. Target, I'm not going to play this until I get the numbers, man. This is going to be a real tell sign on at least the discretionary side of the house. So we'll see how people are spending on more luxury items, the items that they want, not necessarily need. And, people are trying to compare Target and Walmart together in the same category. And, yes, they're similar, but they're not the same, because Walmart almost makes half their revenue on groceries alone, okay? That's about 20% of Target's revenue. 80% of Target stuff is discretionary items, those want items, okay? So Walmart has a different, opportunity, plus their online service rivals that of Amazon, and Target's just not on that level yet. So we're paying attention to this. This will give us an idea of how discretionary items are doing on the big grand scheme of things, and we'll see how they do in earnings. Look at that move on Zoom, man. All right, so I got the top line trigger. If we start to close on a 5 or 15 minute above that, we could think that we're potentially looking for a breakout to a new recent high. However, I would think that we probably are going to get some resistance up here at this level, probably just a little bit above that 80, maybe 81. We start to see some buyer's exhaustion happen, and we get to pull back. So if you got the time and you got the money, you could potentially go out maybe April 21 for a contract, put in a put, go like $80 put, $78 put. I think you'd be able to make some money if you can, ride out some of these choppy waters. Snow, I'm liking this chart, man. I think this is going to break out. I think we're going to hit at this level, push to that 158, and then we could push up to the 165. I think people want this to go. I think they have something to offer, specifically with that, cloud protection and that AI type of stuff. I think this is going to do fairly well. They got earnings later in the week. I think it's going to be the build up into earnings, and I think that they'll do fairly well on earnings. It's been beat up, so it hasn't ran too hard from where it was at previously, and it's, still at an affordable price. So I do like Snow for the push to the upside. I think they're going to do well on earnings.
That's it, team. Don't forget, Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this, or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans, TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war. Traders War Room Trading University is happy to announce open registration for our next option fundamental course. Did Wall Street make you feel like a complete loser in 2022? Or was everything going great and you blinked just for a split second and got repeatedly kicked in the you-know-what over and over again? TWR is here to help you. Our university's fundamental course is an in-depth 5-week-long course that's done live via Zoom platform. Our virtual classroom is where you can interact with the instructor, other students, or see copies of the classes right there on the platform and rivals that of traditional online education. Testimonials from previous class graduates are proof that our cradle-to-the-grave approach works in giving you consistently profitable skills to trade options. Registration is open today. Links are in the description or go to traderswarroom.com. I will see you there. Let's go to war. Make the market bend the knee in 2023. Join TWR and bow to no one. The link is in the description or on the website at traderswarroom.com. Let's go to war.